In this video, you will discover 5 truths banks don't want you to know. If everyone knew this, it could spell the end of the banking system. As Henry Ford once said, "It is well enough that the people of the nation do not understand our banking and monetary system, for if they did, I believe there would be a revolution before tomorrow morning." Let me ask you something. How much interest would you earn if you deposited your savings in a bank? At first glance, it seems like it would grow a little, right? However, if you look more closely, you'll see that's not true. Other basic investments yield around 1% per month today, as of the date I'm recording this video. This is extremely high and, in the end, is above inflation. However, keep in mind that savings accounts, where people who don't understand much about finance keep their money, only yield on the account's anniversary. What does that mean? It means that if you deposit money, you will only earn any interest after 30 days. If you withdraw the money on the 29th day, it won't have earned anything. But at least it doesn't decrease, right? Or does it? During the time your money was sitting there, a force called inflation was working on it, reducing its purchasing power. To illustrate, imagine this. You are saving $100 in a savings account today, and with those $100, you could buy a shirt. 29 days later, you decide to withdraw this money to buy the shirt. However, the same shirt now costs $102 because of inflation. So in reality, your $100 is now worth only $98, as you would need to add $2 to buy the same item. In other words, your money has decreased. Banks create money out of thin air. If I told you that banks create money out of nowhere, you probably wouldn't believe me. However, all banks, both in the country and around the world, have the power to create money up to a certain point, depending on how much people deposit. Let's say you deposit $1,000 in a bank. What do you think the bank will do with that money? There's no reason to keep it there, as the bank wouldn't even be able to pay you interest on that money. So the bank lends your money to someone else who wants to buy a car, for example, or a house, and charges interest, which is often much higher than what it pays you. The average credit card interest rate is about 9%, much higher than what the bank pays you. The point is, the bank will not tell you who they are lending your money to. Whenever you check your account, the bank will show that your money is still there, and you can withdraw it whenever you want. So, if your money is still in the bank, where did the bank get the money to lend to someone else? This is known as the fractional reserve banking system. Banks are allowed to keep only a portion of their deposits, around 10%, and lend out the rest. For every $1,000 you deposit in a bank, the bank creates another $900 and lends it to someone else, totaling $1,900. The bank created $900 out of thin air. It's not as difficult as you might think since it's just digits in the computer. You can make money by taking bank loans and investing elsewhere. In July 2012, Mark Zuckerberg financed his $6 million house in Palo Alto, just 3 miles from Facebook headquarters, with a 30-year mortgage. At the time, he was 28 years old and the 40th richest person in the world, with an estimated net worth of $15.6 billion. The question is, why go into debt when you have billions of dollars and can easily pay it off? If he wanted to, he could easily buy a dozen $6 million homes outright without batting an eye. So why take out a mortgage? It's all about interest rates. To illustrate, let's say you borrow $1 million at a rate of 1%. The average return rate in a savings account is below 1%, but let's use 2.4%. This means that if you deposit that $1 million in another bank, you end up earning $24,000 per month while only needing to make monthly payments of $10,500 to the bank that lent you the money. Imagine if you did this with $100 million or even $1 billion. When you can borrow money for free, it makes no sense to tie up your own money when you can use it for more profitable things. Of course, when we're talking about small amounts of money, this might not make sense because the difference isn't that significant. However, when it comes to large sums, Playing with 1, 2, or even 0.5% can potentially mean tens of thousands, if not hundreds of thousands, of dollars. The richer you are, the less interest you pay. Remember that banks are not charities, but businesses like any other, whose job is to maximize profit. They have shareholders to answer to. If their business model isn't profitable, they won't survive. That's why they feel more comfortable lending to a rich person than to a poor person. When you're a billionaire, for example, banks can sleep easy because no one is worried that you might default on the loan. And if something happens, if you can't make your monthly payments, you can easily sell part of your business to pay off your debt. This makes lending money to you almost risk-free. In fact, this is how the banking system has evolved over the centuries, where banks only worked with the nobility, people who had money and assets that constantly generated income, like land. Compare this to an average employee who might get sick, might not be able to work, or could simply lose their job. If you're barely making ends meet, lending money to you is extremely risky. I know it's easy to criticize banks for this, but think about it. Would you feel comfortable lending money to a friend who barely makes any money, or to a friend who has a business? Probably the latter. As harsh as it may seem, if you want to get a lower credit card rate, better terms when borrowing money, or just a lower interest rate, you need to be in a better financial situation first. Credit cards are the bank's biggest weapons. Research shows that 4 out of 10 people have difficulty paying their credit card bill and are using the card's revolving credit. So think for a moment, the interest on credit card revolving credit is among the most abusive out there, exceeding 400% per year. You should stop right now and understand the rules of the game, and learn to use credit cards responsibly. If you don't have control over this, it's better to stop using the card before it's too late. Banks profit because most people spend without thinking about how they're going to pay. They are used to a certain standard of living and are willing to maintain it, even if they can't afford it. That's why banks keep calling you to offer a new credit card. Don't get me wrong, using credit cards responsibly is great. But if you're not financially responsible, then you shouldn't fall into this debt trap. I hope you now understand how the bank strategies work, and you can think more carefully about where to put your money so it can earn more for you. If you liked the video, I invite you to leave a like and subscribe to our channel if you're new here. Thank you for watching up to this point, and I'll see you in the next video.